Imagine this. Your bookkeeper writes the checks, reconciles the bank accounts, and tweaks your financials without anyone else involved. Sounds like trust, right? But really, it's a setup for disaster. I've seen it firsthand, businesses losing tens of thousands of dollars because one person had too much control. Today, let's fix that. I'll show you how to set up internal controls and divide responsibilities so your business doesn't become the next cautionary tale. What are internal controls? Internal controls are the seatbelts for your business finances. They're the rules, systems, and behaviors that reduce errors, prevent fraud, and keep your reporting tight. But good controls go beyond compliance. They create accountability, align with your goals, and catch risks before they become real losses. And let's be honest, people mess up, people steal, and people overspend when no one's watching. This could be a junior employee, a trusted bookkeeper, or even a business partner. I've seen them all in real businesses with real money, your money. There are 5 pillars to a strong control environment. Define roles clearly, require approvals, secure access to assets and data, review and reconcile regularly, and document everything. Simple but powerful. Each one acts like a guardrail, keeping things from going off the track. What is segregation of duties? Segregation of duties is a system of built-in checks and balances. It means no one person controls a transaction from start to finish. There are 4 key functions you want to separate: recording the transaction, approving it, reconciling it, and having custody of the assets. And by custody, that just means things like checkbooks, bank logins, or credit cards. If one person is handling more than one of these roles, especially approval and custody, that's a big red flag. Don't let the same person reconcile the bank account and also cut the checks. Split the duties and build a safety net. Here are 3 business areas that are especially vulnerable: payroll, accounts receivable, and accounts payable. Let's start with payroll. Hourly employees clock in, that's your record. A manager should approve those hours, and someone else should run the actual payroll. That's custody. If one person is doing all 3, that's risky. Systems like Gusto or ADP help automate this and create separation. In accounts payable, the person who enters a bill shouldn't be the one approving the payments, and whoever sets up vendors shouldn't be able to send money out. Use bill pay or bank platforms with role-based access, or try vouching. That's requiring a full package, PO, bill, and shipping receipt before releasing funds. For accounts receivable, don't let the person logging payments to be the same one who's reconciling the bank account. And if someone's managing deposits, make sure another set of eyes is checking the reports. Keep those 4 duties: record, approve, reconcile, and custody split. That's your frontline defense. Common control weaknesses. Here's where things usually break down. One person does too much. There's no real review. Financials get finalized without backup. And worst of all, nobody's monitoring to make sure that policies are working and in place. Fixes for small teams. Even if you're a small team, you can still run tight controls. It starts with the tone at the top. Document your process, do monthly reviews, and use tools that track activity. Here are 3 setups that work. Example 1, a sole proprietor. Bring in a bookkeeper. You approve and manage money. They handle reconciliations and prep reports. That's a big upgrade. Example number 2, you plus a bookkeeper. They do the entries and recs. You handle approvals and custody. You review reports together monthly. Example 3, you plus a partner. Split ops and sales. A third-party bookkeeper enters and reconciles. One approves and one handles custody. That's a triangle of accountability. No matter your size, clear roles and regular reviews make a huge difference. Tools that help. Modern tools make this easy. QuickBooks lets you restrict your roles. Gusto splits payroll prep and approvals. Bill.com builds in a multi-step review. Use what's out there, automate the guardrails, and monitor in real time. Benefits of internal controls. This isn't just about fraud prevention, it's about better reporting, easier audits, and smoother loan approvals. This also means stronger valuations when you're ready to sell. And let's be real, it's about peace of mind, sleeping better, knowing things are tight. You don't need to flip your whole business upside down. Start small. Break up duties, review your numbers, use tools that build transparency, and if you want help putting this into practice, head over to www.tnvllp.com/accounting. That's www.tandvllp.com/accounting. I'll see you next time.